Welcome back to another segment of Arizona Mortgage News. We're here with our local expert, Mike Goblet of United Mortgage and Financial Group. Good morning, Mike.
Morning, Matt. How are you this morning?
Fantastic.
Great.
So, sounds like we're going to talk about what's involved in locking a loan.
Yep. One of the other 10 things you really need to know about the mortgage process. Locking is obviously an interesting part of it. A lot of people feel, I know, that when they go to a bank or they call me and they say, "Where are rates?" And I give them a quote based upon the generalized information I have. A lot of people think, well, that's their rate. That's what they will get. The answer is only maybe.
Why is that?
Well, it's for several reasons. One, as everyone knows, or I think as most people know, rates can change. As a matter of fact, they can change many times within the day. That's not unusual in either direction, better or worse, because they're tied to the stock market. Until I really take myself or a bank takes a complete application, runs the credit, you really aren't giving anybody an accurate quote, okay? But even then, until the person says, lock in that rate, you're floating, which meaning you're subject to what's ever happening to the stock market in rates at that moment in time. I mean, I've tried to lock people who said, go ahead and lock, and the lender's locking desk was closed because of a rate change in either direction.
I see.
So that's until you say lock that loan, and until the loan officer is able to complete that, your rate is floating and subject to market circumstances. Now, that being said, the locking process is actually pretty simple. All I really need is the person's permission to lock or acknowledgement that's what they want to do. I don't need all the documentation to have received it and you know, in order to lock. So I can lock with somebody as soon as they say lock in that rate, and I've completed the application.
What happens if the rate goes down after you lock in and complete the application?
Well, there's two things. Once when you lock, it's important to understand you've locked into that moment in time, okay, of wherever any rates are. And that becomes important because a lot of people going through the process, let's say they start out with a 15-year or even a 30-year and then want to switch to a 20 or back to a 30 or whatever. What happens is the loan officer goes back to that time and date when the loan was locked, and that's where they get that information. So even if you change terms during the process, you're still locked in to whatever was going on at that point. Now, to answer specifically your question, what if rates drop? My God. Well, a lock means just what a lock means. You're locked into that time and date, okay? Whether rates go up or rates go down. But there's a caveat to that, and I'm sure many people have heard, well, my bank said I could float down if rates get better, excuse me. And the answer is those programs exist, but they're not without guidelines and costs, as a matter of fact. Whether they're built into the initial rate, meaning you start out at a higher rate and it lets you float down to a certain level. But most of what are called, the industry calls float downs, mean that the parameters are you need to be changing the rate at least 0.25% from where you locked at, and that it has an adjustment or a cost of 0.375% of whatever the loan amount is. For example, on a $200,000 loan, that's a $750 adjustment. Okay.
Uh-huh.
Now, when you look at those two caveats, The situation being you really need a dramatic market change, not just some improvement in the rates, to take advantage of a float down. The type of change that generally never happens within a 30 or 45-day period. It happens over a longer period of time. So the reality of a float down is really seldom viable.
Makes sense.
Now it becomes a question as well as what's your commitment now that you're locked? Well, in terms of the client, there really is no real commitment. When a loan officer locks somebody, it's on the good faith belief that that person's going to proceed with the loan. If that person walks away from a locked loan, there's no real consequence to that client. There's no charge that can or should be assessed against that client, and there's no obligation when you lock a loan to continue with it. So if rates do improve and you decide it's to your benefit to change lenders within the process, you can do that without consequence. But that being said, the loan officer does make a commitment. So when we do that, we tell our bank or lender, we're going to provide you this loan. You're going to tie up your money till we complete it. And so the bank takes that seriously because you're tying up their money. And people like myself, loan officers and companies that work through those banks have the commitment of what they call fallout. That if we provide too many loans that fall out, don't go to completion, some lenders will drop those banks or loan officers or mortgage companies if their fallout becomes too great, or maybe they won't let them lock until all the paperwork is in. There's different consequences, but there are consequences.
Very good. Well, as in life, there are consequences, right?
Yep. My real situation that I suggest to clients is when you've locked, don't look back. If you took a bird in the hand, and that should be your real decision, you're pretty happy with what you got, it was a good program, take it and only look forward, don't look back.
Makes sense.
Finally, when your loan officer has locked you in, they should be sending you what's called the locked GFE, which, by the way, starting next week, that becomes something different called the loan estimate due to the changes in the what's called TRID, which I will talk about in the next series. But starting next week, there are major changes both to what used to be called the good faith and the closing documents that you signed that used to be called the HUD settlement statement. But that's for another day.
All right. Well, it looks like I got some funky thing going on here. I didn't realize that was going on. So
if you didn't, I thought you were trying to make me smile, and you were very successful.
All right. Well, as always, great segment, Mike. For those that want to get in touch with you, what is the best way to get in touch?
Well, you can call me at the office at 480-503-3533. Call my cell phone directly at 480-220-2329, or you can email me at mike.goblet at our company initials at umfginc.com.
All right. Well, look forward to next segment, Mike. Thanks for sharing your wisdom.
I do too. I hope everybody will come back to learn what the changes that are being imposed on the mortgage industry, the consequences it will mean. And by the way, like almost anything the government does, there'll be good sides and bad sides to it.
As always.
Okay.
Well, have a great day, Mike.
You too. Talk to you soon.